And the co-anchor of CNBC's Squawk Box and a New York Times columnist, Andrew Ross Sorkin. Andrew, let's take a look at how Wall Street is reacting to the events in the Middle East.
You know, there's something very almost counterintuitive, if not surprising, about what's happened, which is that the stock market has held up remarkably well, if not better than I think a lot of people had anticipated. And in particular, unusually, if you go and look at what's happened actually among Israeli stocks, so these are companies based in Israel, and you look at the stock exchange there. Of course, Tel Aviv Stock Exchange was damaged by a missile yesterday. The stock market is almost an all-time high. It's actually rocketed over the past week, to use maybe the wrong terminology there, in part because there's a view that actually maybe Iran is either going to be toppled or the risks associated with it are going to be won by Israel. And so it's a very sort of unique thing to watch. One thing that's been fascinating, even just over the past couple of years, you know, for a long time, whenever there was news about a potential war or some kind of great conflict or turmoil, the stock market would nosedive. And in the last couple of years, the opposite has actually happened. If you go even look over the last decade, there's oftentimes a little bit of a clip down, but it would have been a mistake to actually sell on those days. In fact, it probably would have been the right thing to actually buy on those days.
Yeah. So, Andrew, the one exception here, I think many Americans would say would be oil. Obviously,
right.
Price of oil has jumped 10-15%. If the United States gets involved, if the war continues and intensifies, what do you suspect will happen not only to oil prices, but also how much more will Americans be paying at the pump?
Well, look, I think people will be going to be paying more at the pump. That is true. I think it really depends on what you think the outcome of the situation in Iran ultimately is, and if it's something that is resolved one way or the other quickly, or something that you think plays out over a very, very long period of time. If this becomes, like the Iraq War or something like that, all of a sudden, yes, this could be very, very damaging to the U.S. economy, to the global economy, no question. If you think that there are several, quick and successful strikes, the truth is actually you'd imagine the stock market would go higher. And while oil would continue to probably rise, given all of those issues, it's unclear, given how resilient this economy has been, whether it actually be that damaging.